Good day, ladies and gentlemen. Thank you for standing by, and welcome to the ACM Research Fourth Quarter and Fiscal Year 2025 Earnings Conference Call. Currently, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. As a reminder, we are recording today's call. If you have any objections, you may disconnect at this time. Now I will turn the call over to Mr. Steven Pelayo, Managing Director of Blueshirt Group. Steven, please go ahead.
Good day, everyone. Thank you for joining us to discuss fourth quarter and fiscal year 2025 results, which we released before the U.S. market opened today. The release is available on our website as well as from Newswire Services. There's also a supplemental slide deck posted to the Investor Relations section of our website that we will reference during our prepared remarks. On the call with me today are our CEO, Dr. David Wang, our CFO, Mark McKechnie, and Lisa Feng, our CFO of our operating subsidiary, ACM Shanghai. Before we continue, please turn to slide 2. Let me remind you that remarks made during this call may include predictions, estimates, or other information that might be considered forward-looking. These forward-looking statements represent ACM's current judgment for the future. However, they are subject to risks and uncertainties that could cause actual results to differ materially. Those risks are described under the risk factors and elsewhere in ACM's filings with the Securities and Exchange Commission. Please do not place undue reliance on these forward-looking statements, which reflect ACM's opinions only as of the date of this call. ACM is not obliged to update you on any revisions to these forward-looking statements. Certain financial results that we provide on this call will be on a non-GAAP basis, which excludes stock-based compensation and unrealized gain or loss on short-term investments. For our GAAP results and reconciliations between GAAP and non-GAAP amounts, you should refer to our earnings release, which is posted on the IR section of our website, and to slides 14 and 15. Also, unless otherwise noted, the following figures refer to the fourth quarter and fiscal year 2025, and comparisons are going to be with the fourth quarter and fiscal year 2024. I will now turn the call over to David Wang. David?
Thanks, Stephen. And hello, everyone, and welcome to ACM's fourth quarter and fiscal year 2025 earnings conference call. I'm pleased with our fourth quarter results, which capped off a solid year of execution. Revenue grew 9% in the fourth quarter and 15% for the full year. We continue to execute well across our core business. We made a lot of progress with new product platforms, and we strengthened our position in China and globally. Investment in AI and data center infrastructure is reshaping the global semiconductor demand, shifting capital toward advanced logic, memory, and advanced packaging. The industry is looking to key suppliers for new technology, many of which have not yet been invented. ACM differentiated technology portfolio has been aligned well with this high-value process steps, and the market is coming for us for solutions. A good demonstration is recent momentum with several key global customers outside the mainland China market that we announced in today's press release. First, we announced that we have delivered multiple single wafer cleaning tools to a Singapore facility of our Asia-based foundry customer. This marks ACM's first tool installation to Singapore, a key milestone for ACM. Second, we announced that we are receiving multiple orders for our advanced packaging tool from 3 global customers. This included orders for multiple wafer level advanced packaging system from a leading global OSAT customer based in Singapore, with a deliveries schedule for the first quarter of 2026. A panel level advanced packaging vacuum cleaning tool from a leading global semiconductor packaging manufacturer based outside mainland China, also scheduled for delivery in the first quarter of 2026, and multiple wafer level packaging system from a leading North America-based technology customer with a delivery schedule later this year. Now on to our business results. Please turn to slide 3. For the fourth quarter of 2025, we delivered $244 million in revenue, up 9%. For the year 2025, we delivered $901 million in revenue, up 15%. Top-line growth of 15% was better than growth for the overall China WFE market, which third-party estimate as generally flat for 2025. We consider this good result, especially since our 2025 revenue include very little contribution from our new products. We expect a strong product cycle in 2026 from SPM cleaning and our furnace product, as we made a very good technical progress for this new product across our customer base. We also made a good progress with our supercritical CO2 dry, track, panel level plating, and PECVD, which we expect to contribute small in 2026, but more in 2027 and beyond. Shipment for 2025 were $854 million versus $973 million. Remember, 2024 shipment increased 63% over the year, so we had a tough compare. We also had some shipment for new product pushing to the 2026. Importantly, we expect the 2026 shipment growth to be higher than our 2026 revenue growth. Gross margin was 41% for the fourth quarter and 44.5% for the full year. Q4 gross margin was slightly below our long-term target range of 42% to 48%. We attribute the Q4 level to product mixing, including a few semi-critical product with a lower margin due to the competitive pressure, and also higher seasonal inventory provisions. We expect a lower gross margin to be temporary. We believe our new product ramp, combined with the product design and the supply chain initiative, will enable us to deliver the best product at a low cost. There's no changing to our long-term target model range of 42% to 48%. Moving on, we ended the year with a net cash of $845 million versus $259 million at the year end of 2024. This balance sheet provides the foundation to continue our effort to develop world-class tools for the leading global semiconductor manufacturers. Before I review our product, I will provide our view on competitive dynamics in China and how we will win in this environment. We have recently seen a flood of new local entrants to the China capital equipment industry. In many cases, there are 5 or more players going after a single point product, all with very similar design and performance. We believe we will compete and win in China market because, number one, we have a differential technology with many products almost the best in the world. 2, we have a deep portfolio of IP with strong protection in China. And 3, our local customers demand the best technology in the world to compete in the global markets. Now I will provide detail on product. Please turn to slide 4. Revenue from single wafer cleaning, Tahoe, and semi-critical cleaning tool was $626 million, up 8% in 2025, and represent 69% of total revenue. We now estimate our cleaning portfolio address 95% of the application and process step, and we are working on developing remaining solution that will bring us to 100% in 2026. We believe ACM now has the widest coverage of cleaning tool, far more extensive as compared to all competitors. The 8% year-over-year growth in 2025 included very little contribution from our newer cleaning line. We expect this new product, including single wafer SPM, Tahoe, and N2 bubbling wet etch, to contribute more meaningfully to our 2026 revenue. As the industry moves to more advanced nodes, we expect increased demand for high performance cleaning tools. The increased adoption of multiple patterning is driving higher layer counts, potentially impact yields, and is demand more cleaning steps with a higher cleaning efficiency. We believe this plays right into ACM's strengths. For example, our proprietary N2 bubbling etching technology is uniquely positioned in the market. We are seeing growth interest for advanced 3D NAND application, where larger bubble size and the uniformity control will become more critical as the industry moves to 300 layer and above. In SPM cleaning, customers are recognizing the advantage of our proprietary nozzle and the chamber design. We believe our platform outperforming leading competitors in small particle cleaning performance. We made a significant technical progress at the end of 2025 with our new SPM nozzle design. We achieved a 50 nanoparticle size count of under 20, which we believe is the best-in-class performance for the industry. Our unique nozzle design does not require any routine chamber DI water cleaning. This is a big deal for customers because it not only delivers a better cleaning environment for the chamber, but it also increases uptime of our equipment. As a result, I'm pleased to report today that we have received a strong repeat order for our SPM cleaning tools from major customers for delivering to multiple fabs in 2026. We are also seeing very strong interest for our unique SPM technology from numerous global customers because they are not satisfied with the performance of their current plan of the record tool. Our supercritical CO2 dry tool integrates ACM proprietary cleaning IP while reducing CO2 consumption by approximately 40% as compared to their competitors. This results in process efficiency with lower operation cost. We made a successful in-house demo for the multiple logic and the memory customer at the end of 2025. We have already received a demo PO for evaluation tools from 2 customers for delivery in the middle of 2026. We expect to deliver additional tools to multiple customers later this year. In mainland China alone, we estimate the incremental market opportunity for this next generation cleaning product is nearly $1 billion. We remain confident in our long-term objective to achieve approximately 60% of the market share in China cleaning market, and we expect the cleaning to outgrow the China WFE this year and in the year ahead. We estimate our market share for ECP in China is now more than 40%, and we remain confident in our long-term goal to achieve 60% or more. Front-end tool represent about 70% of the mixing for year, including our MAP Plus, ECP 3D, ECP G3 products. ECP back-end tool were about 30% of the mix, including our ECP AP product line. In Q4, we delivered our first Ultra ECP APT horizontal panel level electroplating tool to an industry-leading large panel fabrication customer. Our customer ACM prefer horizontal plating solution versus competitors' vertical plating approach due to the much better plating film uniformity and much less cross-contamination between multiple plating chemicals. We expect a growing customer interest in our panel-level solution as industry looks for higher throughput and lower cost to support advanced packaging solution for multiple large die size and HBM AI chips. As discussed earlier, we received order from 3 global customers for both wafer-level and panel-level packaging tools. Our furnace tool are under various stage of evaluation on many customers. Revenue from furnace was relatively small in 2025, and we expect a more meaningful contribution in 2026. We made several technical breakthroughs for LPCVD and ALD and PEALD in 2025. We see good demand across multiple applications, including high temperature anneal, especially 1350-degree version, LPCVD, ALD, and PEALD. We believe ACM differential design positions us to capture meaningful market share. Revenue from advanced packaging, which excludes ECP but including service and spare, was up 45% in 2025 to $76 million and represent 8% of revenue. This includes coater, developer, etcher, stripper, scrubber, and vacuum cleaning tools. We believe ACM is the only company to offer a full portfolio of wet process tool and world-class plating product for the advanced packaging. We think the combination is very powerful. It provides ACM with valuable insight into the challenges of next-generation packaging as AI drives the industry towards 2.5D and 3D integration. We are making solid progress with our new track and PECVD platforms. Last September, we delivered our high-throughput 300 WPH KF track tool for evaluation at the key customer. We expect mass production qualification in 2026 for the tool, and we anticipate this will lead to demand from additional customers, including both standalone and full integrated system in line with the lithography tool. We believe our high-throughput design positions this platform to compete effectively with the current supplier. In Q4, we delivered our first ultra-litho BK system. This milestone represents the first customer deploy of our track series following early demonstration and validation. It also marked our entry into the display panel market, a new segment that requires high-volume manufacturing and strong performance stability. We anticipate to develop our proprietary PECVD platform. Our design has 3 chuck per chamber, which we believe is the only one in the world. This provides flexibility for a wide range of our process with the same hardware. We feel good about our positioning as the team works through the technical detail with a field tool in our Lingang mini lab, running wafer tests and a custom demo wafer. We expect to ship multiple EVA tools in the near term. In summary, our innovation engine contributes to drive differentiated solutions across a broad growing portfolio. As AI drives a more complex semiconductor process, customers are turning to ACM as a trusted partner to help solving their increasing challenges. Next, let me provide an update on our production facility. First, on Lingang, please turn to slide 8. Our Lingang production and R&D center is now our primary production center. The first building is in volume production, and the second provides capacity for the future expansion. Together, the 2 facilities can support up to $3 billion in annual output. During 2025, we made good progress on our mini line and Lingang. We have enhanced our process development capability and now support on-site customer evaluation in fab-like conditions. Our mini line, including ACM tools and tools from other players and metrology tools, we believe the mini line will accelerate our internal product validation, shorten R&D and qualification cycle, and strengthen collaboration with the key customer as we introduce next-generation platforms. Next, our Oregon facility, please turn to slide 9. We are accelerating investment in Oregon, with the operation expected to begin in the second half of 2026. This facility will allow customers to evaluate our technology and to test their wafer locally, and it will serve as our initial base for production in the United States. Our global customers are encouraged by our commitment, which we believe will help them to choose ACM as a key supplier to scale production. We remain very pleased by the success of ACM Shanghai team, which continue to be a key supplier to the semiconductor industry in Asia. ACM Shanghai has also proven to be a great source of capital and financial flexibility for ACM. In September 2025, ACM Shanghai completed a private offering of ordinary share generating approximately $623 million in net proceeds. In February 2026, we complete the sale of approximately 4.8 million ACM Shanghai share at the 160 RMB per share, generating approximately $111 million in gross proceeds. ACM Shanghai also has been a good source of dividends in 2023, 2024, and 2025. We received dividends net of tax of $19.2 million, $28.5 million, and $29 million, respectively. Our major ownership in Shanghai, ACM Shanghai, remains a strategic asset. It enhances our financial flexibility and supporting disciplined execution as we continue expanding globally. Taken together, our expanding product portfolio, increased manufacturing capacity, and strengthening capital position give us confidence in our long-term strategy. Now turn to our outlook for the full year 2026. Please turn to slide 10. In middle January, we introduced our 2026 revenue outlook in a range of $1.08 to $1.175 billion. This implies 25% year-over-year growth at the middle point. We reiterate this outlook today. Since our founding in California in 1998 and the establishment of ACM Shanghai in 2005, we're building a globally competitive semiconductor equipment company grounded in innovation and differential technology. Our leadership in cleaning and electroplating creates a strong foundation, and we are now expanding across furnace, track, and PCVD as we broaden our multiple product portfolio. In Asia, we are recognized as a leader in wafer cleaning and plating, and we are engaging with a global customer across U.S. and Europe. With continued progress across SPM, Tahoe, supercritical CO2 dry, furnace, track, PCVD, and panel-level packaging, we believe we are entering a new phase of a product cycle that will driving sustained growth. We have the customer, the product, the capacity, and the capital to execute our global business plan, and we remain committed to our long-term target of $4 billion in revenue. Now let me turn the call over to our CFO, Mark, who will review details of our fourth quarter and full year results. Mark, please.
Thank you, David. Good day, everyone. Please turn to slide 11 and 12. Unless I note otherwise, I'll refer to non-GAAP financial measures, which exclude stock-based compensation, unrealized gain/loss on short-term investments. Reconciliation of these non-GAAP measures to comparable GAAP measures is included in our earnings release. Also, unless otherwise noted, the following figures refer to the fourth quarter and full year of 2025, and comparisons are with the fourth quarter and full year of 2024. I will now provide financial highlights. Revenue was $244 million for the fourth quarter, up 9.4%. For the full year, revenue was $901.3 million, up 15.2%. Full year revenue was in line with our original guidance set a year ago and slightly above the updated range announced on January 22nd. Fourth quarter revenue for single wafer cleaning, Tahoe, and semi-critical cleaning was $159.9 million, up 3%. For the year, this category grew by 8.1%. Fourth quarter revenue for ECP, front-end packaging, furnace, and other technologies was $64.1 million, up 23.9%. For the year, this category grew by 32.1%. Fourth quarter revenue for advanced packaging, excluding ECP, services, and spares, was $20.5 million, up 23.8%. For the year, this category grew by 45.3%. I will now provide revenue mix by customer type for 2025. Starting this year, rather than disclosing specific customer names, we are now disclosing revenue by customer type once a year. For each customer type, this includes product, services, and spare parts. We've included the mix table on slide 7 of our presentation. For 2025, our revenue mix by customer type was split among foundry, logic, and other, 59%, memory, 27%, packaging and wafer processing, 14%. 2025, we had 4 10+% customers. including our top customer was 16.9%, next was 13.5%, then 11.6%, and 10.2%, for an aggregate total of 4 customers representing 52.2% of total sales. For 2024, we had 4 10% customers, also for a total of 52.2%. Total shipments were $228 million for the fourth quarter, down 13.5%, and $854 million for the full year of 2025, down 12.2%. David noted we had a tough compare versus a strong 2024 when shipments increased 63% year over year. We also did have some shipments for new products pushed into 2026. We expect 2026 shipment growth rate to be higher than our 2026 revenue growth rate. Gross margin was 41.0% for the fourth quarter and 49.8%. For the full year, gross margin was 44.5% versus 50.4% in 2024. Q4 gross margin was slightly below our long-term target model. Adding to David's earlier remarks, gross margins were down 8.8 percentage points year over year on a quarterly basis. This was due to product mix and margin pressure concentrated in a few semi-critical products, which contributed about 5 points of the headwind, and a higher level of inventory provisions that contributed about 4 points negative impact. As David noted, we expect the lower gross margins to be temporary. We believe our new product ramp, combined with supply chain initiatives, will enable us to deliver the best products at a low cost, and there is no change to our long-term target model range of 42% to 48%. For modeling purposes, we expect gross margins to be at the lower end of this longer-term target range for the first half of 2026, with an anticipated lift in the second half, due in part to contribution from newer products, which generally have higher gross margins. Operating expenses were $70.6 million for the fourth quarter, up 21%. For the full year, operating expenses were $258.4 million, up 34%. For 2025, R&D was 15.1% of sales, sales and marketing was 7.8% of sales, and G&A was 5.8% of sales. For 2026, we plan for R&D in the 16 to 18% range, sales and marketing in the 7 to 8% range, and G&A in the 6% range. Operating income was $29.5 million for the fourth quarter versus $52.8 million. Operating margin for Q4 25 was 12.1% as compared to 23.6%. For the full year, operating margin was 15.9% as compared to 25.6%. Long term, we look to grow our R&D spending in line with revenue, but we expect to show operating leverage in SG&A with spending growth below our revenue growth level. Income tax expense was $6.6 million for the fourth quarter versus $17.3 million. For the full year, income tax expense was $13.3 million versus $35 million in 2024. For 2026, we expect our effective tax rate in the 8 to 10% range. Net income attributable to ACM Research was $17.3 million for the fourth quarter versus $37.7 million. For the full year, net income attributable to ACM Research was $110.2 million versus $152.2 million. Net income per diluted share was 25 cents for the fourth quarter versus 56 cents. For the full year, net income per diluted share was $1.61 versus 2.26. Our non-GAAP net income excluded $6.4 million of stock-based compensation expense for the fourth quarter and $33.6 million for the full year. I will now review selected balance sheet and cash flow items. Cash, cash equivalents, restricted cash, and time deposits were $1.13 billion versus $441 million at year-end 2024. Net cash, which excludes short-term and long-term debt, was $845.5 million versus $259.1 million at year-end 2024. $585.4 million increase in net cash for 2025 included $623 million net raised in the private offering by ACM Shanghai in 2025. Total inventory at year-end was $702.6 million versus $676.4 million at the end of the third quarter. Raw materials were $349.7 million, up $23.5 million quarter over quarter. We made additional strategic purchases to support production plans and to mitigate any potential supply chain risk. Work in process was $61.4 million, up $1.9 million quarter-over-quarter. Finished goods inventory was $291.6 million, up $0.9 million quarter-over-quarter. Finished goods inventory primarily consists of first tools under evaluation at our customer sites, along with finished goods located at ACM's facilities. Cash provided by operations was $33.9 million for the fourth quarter. For the full year, 2025, cash used by operations was about $10 million. Capital expenditures were $58 million for the full year 2025. For the full year 2026, we expect to spend about $200 million in capital expenditures. This includes continued investments in Lingang, including the mini line and the second production facility, fixed assets for the business, and investments in Oregon, along with other items. That concludes our prepared remarks. Now let's open the call for any questions that you may have. Operator, please go ahead.
Thank you. To ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. One moment while we compile our Q&A roster. Our first question will come from the line of Charles Shi with Needham & Company. Your line is open. Please go ahead.
Hi. Thanks for taking my question. I believe you gave a pretty good color on shipment versus revenue growth this year. So have a question, since you mentioned about new products probably going to be a bigger driver this year for growth, and wonder if you can give some color, let's say excluding the new products, what's the growth, either shipment or revenue is expected to be, excluding all the new products for the I think maybe I'm talking about the existing product lines in cleans, plating, etc. Thank you.
Okay. Thank you, Charles. And actually, that is as we said, we made quite a big progress, right, in the SPM process. Generally speaking, SPM, hot SPM represent 25-30% of the cleaning market. And this market in the last couple of years were not much touched so much. As I said, last 2025, we made a very good progress, and both into the special nozzle design for the high temperature and also Tahoe product. So we're getting to very aggressively into this market. And again, this is a very high margin product, and also a lot of customer, both in the mainland China, also outside China, they have suffered the particle issue with this high temperature SPM process. And we think with our proprietary design nozzle, we can control a very good environment, so therefore can be real reduced particle size. So that can be really enhance our market growth in cleaning. Secondly, I want to say that is our into bubbling, proprietary bubbling wet etch technology is really critical for the 3D NAND, silicon nitride etching process, which we believe our proprietary technology not only cover today's demand for 300 layer, we believe as people move into 400 or even 500 layer will suffer this kind of uniformity of the via top or via bottom, right? So we're using large bubble and size. We also, with our proprietary technology, we can make a very uniform large bubble distribution in the tank. That will be real enhance the etching uniformity and from the top to the bottom for the via. So we believe that's not only demand in the market in China, we also see that demand outside the global market too. And third one, I also mentioned that is our supercritical CO2 dry. We also made a lot of progress, right? And which is past customer demo. We have 2 tools, scheduled to be delivered, in the first or second quarter of this year. We have additional interest in coming in. Again, since the supercritical CO2 with our proprietary design, we got a capacity or cavity, our CO2 chamber is about 40% smaller. So we believe that we're really providing customer a 40% reduction of the consumable cost. And that really also, again, right, driving this product now in the local, I call it China market, we're also getting into the outside China market. So with all this cleaning, I call it together, we believe also expansion in the future. This will probably represent, even in China, almost $1 billion market potential for us to get in. So we're still very, exciting about our continued expanding our cleaning product, in the China market. Plus, also give us really strong differential technology exposure to the global market, right? So that's for cleaning. And again, for copper plating, as I mentioned, we have a full set of their cleaning product, front end, TSV, back end, advanced packaging, including also, this, I call it compound semiconductor. Plus, recent, we just, announced our panel, horizontal plating, which we believe very, very key technology to driving for the panel size plating. This moment, everybody using vertical and copper plating for panel. We're the first one in the world so far doing horizontal plating, right? With our differential technology, we believe probably most likely we're the only one in the market to driving that horizontal copper plating. So this is also we see the bigger interest, not only in the China market, we see also a lot of interest, coming in for us to deliver, this tool. So with that, all new product, in our existing cleaning copper plating can drive a lot of revenue this year, including next year, right? And then plus, as I said, our other furnace and PECVD and also track business, we're developing for last 4 or 5 years, really made a lot of technology breakthrough too. So believe those technology getting this year start getting market, and we're real sustaining our next 3 to 5 year growth. And which that last 3, 4 years, our major growth is come from cleaning the copper plating. And next few years, we see this new product coming, will definitely strengthen our high growth profile in next few years. So we're very, exciting, very, try to executing our strategy to continue to grow our revenue. Charles.
Thanks, David. Maybe a question on profitability. So you reported the last year, you gave some color about this year, but I believe if my math is right, your operating margin will compress the last year from maybe close to 26% in 24 to 16% in 25. But this year, based on your what you guided about gross margin, what you guided about R&D, SG&A, doesn't look like operating margin can rebound. Feels like operating margin probably more or less the same or even coming down a little bit depending on how the gross margin trends for the remainder of the year. So want to get some sense what's the reason for operating margin being under pressure for almost 2 years, and how do you plan to address this and maybe try to expand the operating margin from here? Thank you.
Yeah, actually, that's this way. Looking at gross margin, right? We're the probably top of the equipment company in China, right, for gross margin, right, for the last few years. And as you said, Q4 of our expect Q4 last year, we do see our first time our gross margin is lower than our range, 40 to 48%, right? As we're explaining, maybe 3 factors. One is the product mixing. We have 1 or 2 products, which is a semi-critical tool. Do have pressure from the competitor for pricing, there. The next one is really our this inventory provision. But we think this year, as we are new product coming, as I mentioned, this 3 cleaning product coming, will definitely enhance our margin. And also our inventory provision, we believe will be also greatly reduced too. So with that, we still have a confidence we're in the 40 to 48 gross margin in this year or beyond. And more than that is, as you said, we put quite a bit R&D last year, right? It used to be R&D 13, 14%. This last year we're getting to 16%. We'll probably will keep that number and in a way. Why? The next few years, AI is driving a lot of demand for the new technology, and everybody else, first tier company, in outside China, all people put a lot of R&D. And so we'll continue to invest that, which we know will impact a little bit, our operation margin, but it's worth to spend the money now. Why? I said opportunity is there, right? And a lot of customer real demand for the new technology, which I believe a lot of AI technology today even not invented yet. So it's really give ACM good opportunity with our, I call it our innovation, power, our defense technology development capability. We can use this AI as a trend. We'll catch a lot of our new technology and also catch the customer. This horizontal plate is one good example, for example, right? So again, and it's worth to spend more R&D, even get a few % of the operation margin lower, which is real long run, and we're working for the investor interest and also the growth ACM, market and into the next few years.
Yeah. Hey, David, I might add a few things. I think that was a good overview. But Charlie, I think kind of summarizing it up, we're spending into the $4 billion market opportunity. There's a number of products that areas that we've been investing in that haven't scaled yet, but we expect them to scale over the next few years. It's the right thing to do to spend into that. You're right about the operating margin for 2026 kind of comes in at the mid-teen level, similar to what it was here in 2025. You move out a few years, our target is to keep those gross margins at that target range and then grow our top line faster than our OpEx. I think you can see some leverage in the out years.
Okay, thank you.
Yeah, thanks, Charles.
Thank you, Charles.
Thank you. One moment for our next question. Our next question will come from the line of Edison Lee with Jefferies. Your line is open. Please go ahead.
Oh, hi, David and Mark. Congratulations on the results. I just have two quick questions. Number one is that for the fourth quarter, the margin is a little bit low and the revenue growth also is a little bit slow, and then your shipment, I think, declined on a year-on-year basis. So how much of that is just product mix and seasonality, and when do you think these numbers will actually start improving in 2026? And then the second question is about the $111 billion you raised by selling down ACMS. Can you shed some light as to how you would actually utilize that proceeds?
Okay. So let's answer your first question, right? I think that you look in the, I just mentioned last couple of years, our major growth engine from cleaning and also copper plating, right? Even in the cleaning, I said there's one important product, which is a SPM process. We're not touched too much. As I mentioned last year, end of last year, Q4 last year, we made a significant progress with this, special nozzle design. We believe our performance is outperforming and top tier as a tool. So we see that grow continuously, right? And so then I would say our cleaning, copper plating, also horizontal panel continue to expand too. So that keep momentum. Our cleaning market, probably today in China about 35 range, we're expanding to 50-60%, next few years. And the copper right now, the 40, I still say we're trying to catch 60 in beyond market in China. More than that is those different product, we see the very high interest from global, top tier customer. So that's what we also reinforce our sale outside China. So that's what I see the, impact or boost our revenue, for our existing product. And also I want to see that through the last 5 years, we are really working with differential, PECVD and track and also furnace technology, which is, we believe a lot of new technology we are putting in and nobody had it before, right? So that's what reinforce our, I call the market position. And plus, those tools is really with our differential technology, we put a lot of time to develop IP, develop the roadmap. It costs a little bit long time than, the other guys. And now it's come the moment to the market. And plus, I want to see another bigger impact is, I call it improvement is last Q3, we start using Lingang or mini line, which we do not have it before. That was really helping our internal demonstration, internal R&D and speed. we see the bigger, impact already. So that will be helping our tool mature before ship the customer. So with all together, I want to say, this new growth and from the existing and also our new product coming in, we're driving ACM in real high growth profile in the year and this year and in the next few years. So we're very confident. Plus, even I say, WFE market in China is flat. We can get a higher growth rate because of new product coming in. And plus, also, as you say, we have made a lot of progress in the global customer. This news announced, today. We also see a lot of interesting coming into our differential technology from top tier customer because we have a pattern has been, locked the technology already. They almost have no choice. They have to come to us. Anyway, so that's really exciting for our technology. We're really trying to pushing our, technology real benefit to international global customer for their AI challenges.
Yeah.
Hey,
Hey,
Mark,
David.
anything you want to add on that?
Yeah, let me add on to something before you answer his question about our Shanghai stock sales. So, Edison, for Q4, you probably remember last call, we mentioned that, Q4 in the year, the overall year came in at the midpoint of where we started the year, maybe a little bit better. And don't forget, we had two things. Our newer products didn't kick in very little in 2025. And then we did have a customer push out from Q4 into 2026. And so that was, kind of those two things that hit 2024. I'm sorry, the Q4. When you look out to 2025, we're expecting linearity pretty similar to 2026. We're expecting our linearity to be pretty similar. So the first half will be about 42-43% of revenue. Second half will be 57 to 58%. But I would kind of anticipate Q1 at about 18 to 20% of the full year mix. Maybe David, if you wanted to take his question, what are we going to do with the cash that we raised or that we sold? The cash that we sold. Yeah.
Sorry, Mark, can you hear me?
Yes. Yeah.
Hey, before we move on to the use of proceeds, can you also comment a little bit on what you said about, I think, some products having some pricing pressure, which I think partially account for lower margin in the fourth quarter?
Yeah, and there's not much to add to what I said there. What David and I both said. There were a couple of semi-critical products that had particularly low margins that hit us in Q3 and Q4. David mentioned in the prepared remarks, he talked about the competitive situation in China. We are very focused on developing world-class tools. We think that there was also a bigger provision in the back half of the year. So we think that'll be the overall provision for 2026 probably be smaller than it was in 2025, and it'll probably be more balanced throughout the year. Yeah.
Okay.
So you want to touch there how we're using proceeds, right?
Yes.
Okay. Well, obviously, we have a second offering in China, right? Those money will be real focusing on R&D again, our expansion for their manufacturing. We have a second building. We'll start decoration this year. So with that add together, probably we can manufacture $3 billion annually, and which will really give us a lot of room for manufacturing. And plus, we're also putting money in the mini line, as I mentioned. This mini line really speed up our internal R&D and debugging the tool, and also even can do the joint development with the customer process too. So it's a really worth spending for this money. And the proceed we got from the sold 1.3% from Shanghai here. Definitely the major purpose for that was spending global customer global marketing sale. So we see that opportunity really big in a global market. As I mentioned, we do have some differential and technology might be the only solution for their AI challenging. So those products we think will be really gather attention from the global customer. So we have to spend money and building the international strongly sales channel, and also we already had a Korea manufacturer base already, and however with this geographic tariff going on, we have to real minimize the tariff impact, right? So that's why we started assembly tool in the USA. So that will be real reduce our concern or any dynamic changing for those tariff will impact our revenue. So anyway, that's really what we work on. And our goal is very simple. We try to working with satisfy all regulation and requirement and maximize the investor interest. We're building a global sales, global company. That's our goal.
Okay, thank you.
Thanks, Edison. Yeah, appreciate it. Next question, please, operator.
One moment. Our next question comes from the line of Jimmy Hong with JP Morgan. Your line is open. Please go ahead.
Hi. Hi, David. Can you hear me?
Yes, please.
Yeah. Thank you. Congrats for the good results. I want to ask about we deliver single wafer cleaning tools to a Singapore-based foundry. What would be the potential size of shipments in terms of units or dollars this year or next year? And next year, yeah. This is my first question.
Yeah, very good question. Actually, we have a few tools, or we're in the installation process right now, right? This tool will be qualified and go in production, this year. And with that, we definitely will introduce more of a cleaning tool. And also, we do have a copper plating and in the behind. So that's really will give us exposure of product, in Asian market. And so it will be real making more of a, I call it confidence and also get a higher interest from other players in Asia and the market too. So we see this a really bigger milestone and for us. And plus, we're not only look at a customer only in Singapore, and we do have a customer in Korea, and also we have a customer, potentially in Taiwan. So we have really confidence, we should have expanding quickly in the Asia market. And plus, again, we're also very focusing on our U.S. market too. We do have advanced packaging tool PO and receiving, and we should deliver by end of this year. And we see a lot of potential going on in the U.S. market too. Again, because today all the memory or logic, they're AI driven for their advanced technology. ACM, I won't say I feel good technology really needed for their production line. We believe that's very beneficial for the customer and also can help expansion of market to global. So it's a great opportunity.
Yeah.
Because again, innovation is a key, and every customer and every key customer, they all demand for innovation technology, which will perfectly fit our strategy.
Yeah. Thank you, Dr. Wang. Yeah. So for Singapore business, how's the chance that we penetrate to Singapore-based memory makers in the next few years? And my second question is for advanced packaging. We are making great progress, but for Taiwanese foundries and OSATs are leading the panel level packaging for AI GPUs and ASICs. Can we talk about our POP progress with potential Taiwanese players? Do we have any order forecasts or purchase orders from these Taiwanese potential customers? Yeah.
Yeah, actually, we are talking to a few key customers, right? Even a panel large size, 515 by 510. And also we're talking about their 310 by 310, right? Which is the two vision right now people are trying to pushing. So we have very good exposure to those customers. By the way, April 7, 8, we'll have attending the panel conference in Taiwan. And in that conference, we'll do the keynote speaker about the horizontal plating and also our vacuum cleaning technology. So it's really a lot of exciting, I want to say, interest coming. And also, I heard everybody say panel product or equipment, they're probably satisfied or all other product except their plating. So plating become the bottleneck for their production expansion. So with that, demand, I said we are the only one supplying horizontal plating. You probably heard that is the one key player in Taiwan. They said that they only want a horizontal plating. They don't want a vertical. So our horizontal plating perfect fits their strategy or their demand. So as I said, is really we see the big opportunity and with our panel product. Actually, we're not only trying to say introduce so far 3 products, right? Panel plating, vacuum cleaning, and also the bevel. We're going to develop also additional, and code developer, wet etcher, and cleaning, all kind of wet tool we're putting in too. So that's really what we catch this wave of the panel, I call the shift, right, for the advanced packaging. So we're in a very good position, and for those coming panel advanced packaging expanding. We're very excited about this opportunity, right?
Yeah. But do you know, like, in which kind of periods, quarters, it will be more clear that whether we'll have any order forecasts or purchase orders for this POP equipment? Yeah.
Well, let's put it this way, right? We announced that we do have also PO from outside mainland China, right? I mean, we said already. So you know what I mean here. So and then we're continually expanding more, right? So again, I want to say this year we have a confidence catch additional PO for our bevel, for our vacuum cleaning, and also for the horizontal copper plating. And probably not only in Taiwan market, we also see the opportunity in Korea, also in Singapore, by the way. So it's very exciting.
Yeah. Yeah, thank you. Maybe I can squeeze in my last question about investor FAQ. Like ACM has disposed a small portion of stake in ACM Shanghai. How do we think about more further stake disposal in the future? You mentioned that U.S. international capacity builds will require more funding. Will we dispose of more stakes of ACM Shanghai in the future? Yeah.
Repeat the question again. I'm sorry. Can you repeat again?
He's asking, are we going to sell more of our ACM Shanghai?
I see. Okay. We sold 1.3% already, right? And which get a proceed, about 111 million. And, we do have both arms to raise money. We can raise in U.S., we can raise in Shanghai. We're very flexible for what we're choosing, number one. And this moment, I want to say our Shanghai stock is still, we think it's still undervalued, okay, with our growth. So we maybe consider what the money demand and the timeline, also what's the stock pricing in Shanghai. We'll decide, where or when we should sell additional or not. And plus, as well as several arms, we can raise the money in USA. So it's quite flexible for us to raise the fund. And this moment, I want to say, well, obviously we'll continue investing more in global market, and we have no concern for those, money where it comes from, right? We're very confident. We also have another tool we can get the money anyway.
Yeah. Thank you so much. That's all my questions. Thank you, Dr. Wang. I'll be back to the queue. Thank you.
Great. Thank you.
Thank you.
Thank you. Seeing no more questions in the queue, let me turn the call back over to Stephen Palaio for closing remarks.
Okay, great. Before we conclude, I just want to give everyone a quick reminder on our upcoming investor conferences. On March 9th, we will participate virtually in Loop Capital Markets' 7th Annual Investor Conference for one-on-one meetings. On March 23rd and 24th, we will present at the 38th Annual Roth Conference in Dana Point, California. Attendance at the conference is by invitation only. For interested investors, please contact your respective sales representative to register and schedule one-on-one meetings with the management team. This concludes the call, and you may now disconnect. Take care.
This concludes today's conference call. Thank you for participating, and you may now disconnect. Everyone, have a great day.